Steve Forbes with us. I grew up on Charticle. I grew up with your magazine, iconic in the house. America's lost that spirit. How does Wall Street, how does high-frequency trading get the trust of America back?
Well, high-frequency trading is simply a means to make possible one of the fastest-growing parts of the market, exchange-traded funds. Normally with closed-end funds, you have a discount between the value of the securities and what it actually sells for in the marketplace. You see the discrepancy all the time, usually on the downside, sometimes on the upside. High-frequency trading makes even a liquid ETF stay very, very close to the net asset value of the underlying security.
There is a value to it. Michael Lewis agrees with you. There's a value to it. How do you get rid of the harmful parts?
Well, that's what the debate should be about, not whether we have high-frequency trading, but if there's abuses, then you deal with them. We've been doing that
Do you see that, Brendan?
ever since we had stock markets.
No, I don't see them clearing up, but I also think that Flash Boys, the Michael Lewis book, is a Rorschach test for how you feel about Wall Street. I'm not a Wall Street guy. I just don't have any experience on the street, so I read the book. I found it compelling, but also, Bloomberg News reported on a Bank of England report, that looked at the FTSE over 2 years and discovered that high-frequency trading actually tended to create lasting price changes and not temporary price changes. It didn't see the harm that Michael Lewis found in Flash Boys.
Well, I think the argument is that people are paying for two different lanes. That's the underlying argument that the market is regulating. Also, just the basic premise that depending on where you geographically locate your servers, you're going to have a competitive advantage. That doesn't feel like a level playing field.
Yeah, I agree. He ends the book with that antenna out in Ohio, which was that geography.
Yeah.
Delta's